So guys, welcome back. Sive is here with forexpeacearmy.com. Let's take a look on the gold market. So today we have prepared a bit special report. So I decided to just shed some light on the recent events that has happened on the Chicago Mercantile Exchange with the silver futures trading. And because I see from the comments in the social media on the X and our forum that people are not quite well, they can't imagine the whole picture in the whole, so how it looks in general. And yes, this event seems, well, it's possible hardware is playing tricks sometimes, so what's the problem with this overheat on the Chicago Mercantile Exchange futures? But there are lots of nuances, and if you will get them together, you will get really stunning pictures. So I think that it's worthy of our overview, and today we have prepared special report dedicated to the Chicago Mercantile Exchange issue with the silver futures trading and silver and gold in general as well, where we tied together because actually the CME issue is just the top of the iceberg. It is just a conclusion, the fruit, but everything begins somewhere lower, on the lower levels. And not occasionally we speak about liquidity, monitoring this topic in the United States in recent couple of months, because we think that is crucial moment. As we promised, also we have taken a look at the situation in Japan, because it also has a direct impact on ongoing processes, and it also makes relation to what we see currently on the commodities, in particular in precious metals. If you will take it all together, you will understand why through the year where we were telling regularly that for a gold market is yet to begin. Everything is yet to begin. And if you're reasonably take the investment on the precious metals using no leverage or using just minor leverage, very small, 1 to 2, probably 1 to 3, not more, but better no leverage at all, every collapse on the gold market will give you more chances to succeed. It will be a really happy event for you, because it will be every time the possibility. It will be every time it will be the chance to get the precious metals, including the gold, silver, whatever, at the good prices. So I think that our investigation of the current situation will surprise you, and you will know a lot of new things about situation. You will understand our view, our long-term view on the gold, why we think that everything is just yet to begin. So I will put the link to our research as usual down below the video. Currently, let's take a look what is going on the shorter term. So as you can see, our bullish grabber on the weekly chart last week was spot on, and the only problem currently, guys, is I just do not know how market will open on Monday. What will happen? So I'm just could operate with the charts that we have. Particularly speaking, I do know that based on the technical picture market, overbought levels on the market stands around 44. It means that unpainfully market could reach previous top and even could wash it a bit, grabbing the stops around it. So let's just use this level as a nearest standing target, because neither weekly overbought nor monthly overbought are not preventing gold from this action. On the daily chart, you also could see that overbought stands slightly higher, and as soon as market will keep creeping higher, it also will keep going higher. So from that point of view, I think that this level might be reasonable. Yes, later we could just transform our 222 into butterfly, start using extensions above the stop. This looks great. It's really amazing and very actually inspiring, but currently let's be reasonable. We have good breakout out of the triangle, some acceleration. Actually, grabber that we have discussed already mostly hits its target. So we said 42.45, its previous top, and market already stands at it. But based in taking in consideration all the stuff that has happened, I think that we could extend it and start considering this ABCD pattern as a target, which is actually has target $100 above. It's 43.45 right now, and actually we could just treat it in common, its previous top. And another reason why we could do this, because market here, if you take in consideration this ABCD pattern, it already stands above minor extension, above the COP target, and it is past it with the acceleration. So it means that now it's aiming on the OP. which leads us to a couple of conclusions. First is, of course, target itself. Second, since it already stands on the way to the OP, we should not get any deep retracements. One particular thing that we do not want to see, obviously, is return back down inside of the triangle, right? So it might be really bad sign for any bullish background for now. So it means that if retracement will happen at all, this is actually the major problem, because in current environment I do not know when we will get it and from what points we will get it, whether we will get it at all. So this will be really the headache for those of you who haven't taken any position with the entries that we've got in last 2 weeks. So we discussed 2, 3, maybe 4 entries, different entries on the gold market in recent time. So if you have missed them, so it might be a bit kind of the challenge for you to find, to get the good points. In fact, you will depend on the market right now. So that was about the daily. On the 4-hour time frame chart, you could see that our Wednesday setup with the upward breakout also worked perfect. The grabber has been triggered. This dynamic pressure that we discussed also. Well, actually, everything goes with the plan. Market behaves very reasonable. So following just all technical issues that we have discussed. XOP is done. So minimum target is actually completed. Now, following this logic, we probably could use more extended extensions, more extended targets on based on the butterfly now. And next one will be 43.12, approximately 43.10. And take a look at the 1618 extension, 43.97, almost 44. It's very accurately agrees with the daily top right here. So mostly we could say that this butterfly might be finalized, this potential stop with this target together with the pattern that we have here. Now about the entries. Here we could use just the common sense, guys, because we do not see any retracement, we do not have anything that could let us to calculate possible downside extensions, we do not have any patterns, nothing. But using the common sense, what we could do, as I said, we do not want to see market drop below the triangle line, right? So this is triangle border. Preferably, if market will even stay outside this consolidation, but not necessary. From that standpoint of view, I think that the levels around 41.50, 41.60, this support cluster, and 41.90, 42, it might be 2 levels to consider for re-entry. If, of course, we will get it at all. So I will not be surprised we will get some upside continuation right on Monday. But if still we'll get a retracement, that's 2 levels to consider. But don't do it blindly. So if we will get like in market indeed starts retracement, keep an eye on the retracement. What the shape will be, what the patterns, use the follow our routine that we do when we calculate extensions to the downside to confirm some particular levels. When we will get it, you will be able to estimate with more precision what levels to expect. But currently, at the first glance, it seems these two should be okay. So that's in fact all that I could say currently on the gold. Context remains bullish, market is not overbought. We considered possible extensions, possible targets here. Fundamental background you could read in the report. Have specified the particular levels to watch for if we will get like in retracement still will happen. So let's just do it and see what will happen. Well, as usual, see you on an update on Tuesday on the gold market.